Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit CFDs.com for your trading needs and certainly apply for that potential bonus offer as well. Alternatively, you can visit the educational website www.cfds.education to certainly learn more. Okay, this is a video brought to you on the weekend for Monday's trading in terms of the FTSE 100. Let's go over the fundamentals first of all. Obviously, the US markets flushed quite substantially. On a Friday, Dow was down almost 300 points at one time, the S&P down 40 handles, and the Nasdaq down in excess of 100 points. Ouch. Okay, that's one hell of a risk aversion mode. Okay, so we had the Euro FTSE itself down 2.5%. The DAX flushed quite substantially, touching the 10,300 level, and the CAC as well. So the Nikkei was actually positive, which is quite surprising given the fact that the US market certainly flushed quite substantially. And the Shanghai was only down 0.5%. So let's see exactly what's happening here, and let's try and decipher. Now, in terms of the economic data on Friday, we did have retail sales missing, so that certainly helped the risk aversion trade to a large extent. Okay, so let's see if we can decipher this. Let me just bring up my stats here. Okay, so in terms of the actual markets themselves, I mean, we had the retail sales over the weekend as well, which I'm going to discuss. But first, we'll discuss the actual stats on Friday. So the Michigan consumer sentiment came out lower than expected. Business inventories, retail sales lower. Okay, producer prices actually came out lower as well, so helped the QE trade. But markets chose to focus on the poor retail sales number, and that obviously sent the S&P 500 down quite substantially. Now, if I just bring up the chart of the S&P for you, and you can see here on the 60-minute chart, we flushed quite substantially. The daily chart now, we are back into this support zone. So previous resistance equals support, horizontal support, and we are looking to potentially move higher. Now, we have previous resistance equals support at 1993. Now, you are in no man's land in terms of the S&P 500, but I do expect a bounce here. I'm expecting a bounce on the S&P 500 coming back up to the 2040 level. The lower high certainly held, and the bull flag or this bullish engulfing candle was totally negated on the S&P, and we now are into this zone. Okay, now I'll do a separate video in terms of US markets. I'll try to focus on the FTSE 100 for now. Now the Shanghai now is into previous resistance equals support, so we are back into this diagonal trend line support. Therefore, I am expecting a move higher, especially given the fact that we've had industrial production data come out better than expected and retail sales better than expected as well over the weekend. Now, the latest data out of the US in terms of the economic, Reuters economy shows signs, here we go, let's share the article. China economy shows signs of steadying, more policy support needed, etc., etc. China's activity data was stronger than expected in November. Now, that alone will trigger a short squeeze going into Monday's session. That's obviously bullish for the Shanghai and Asian markets overall, and obviously it's bullish for the European indices as well. So therefore expect a gap higher, or shall we say, well, it depends on the gap itself. I mean, we're already down quite substantially after hours, and we shall see. Okay, so bullish news from that perspective. Oil prices, in terms of oil, let's bring up a chart of copper. I mean, copper was bullish all day on Friday. So again, it's quite surprising to see. I mean, obviously this economic data that's come out on the weekend, retail sales, industrial production will help copper rise even further. The daily chart certainly seems to be putting in a potential pivot low, and we are looking to potentially thrust higher. Now, the 4-hour chart itself, yes, we are having this potential inverted head and shoulders, or a base, basically a higher low, looking to thrust higher. So the chart of copper is certainly in the all clear. Also, the chart of gold is in the all clear as well. And the daily chart, obviously, we have this bull flag formation now. We are looking to potentially test the high. So we've consolidated, and now we are looking to potentially move higher. So gold certainly is in the all clear. The only wild card at present is oil, and as you can see here on the daily chart, we're flushing quite substantially, and we have basically made new lows. Going to a monthly chart, you can see that since 1986, I mean, we've not had these lows. So this is certainly very, very, very negative. Okay, I'm looking at a daily chart, you can see it only goes back to 1983, but basically we're on charting territory at present. Okay, 60-minute chart at the moment, no real signs of a reversal. 10-minute chart, you have this falling contracting wedge type pattern, so you're looking for a potential breakout. Now, what could actually trigger a rally in oil or commodities in general would be the dollar. Now, this is the pattern that I've been looking for, and this is why I was relatively bullish on the FTSE 100 towards the late session. I was looking to buy the dips in the FTSE, although I did get stopped out late in the session. but still managed to finish 378 points for the week, so that's good. Now, bear flag, you have this bear flag obviously in play or in motion, and you're consolidating, and this will, a drop in the dollar obviously is always good for commodities, and therefore I am looking for this potential fall, and obviously for commodities to certainly move higher. That's my expectations at present. Okay, so given the fact that you have a weak dollar, given the fact that we had weaker data, retail sales, business inventories, Royal Michigan, etc., etc., that will help the Aussie and the Kiwi. Now, let's bring up the chart of the Aussie itself. The Aussie itself on a 60-minute chart, you can see that you're clearly into support on the Aussie, and obviously the stronger Chinese data will only help the Aussie, if anything. Okay, we'll certainly push this higher. So Aussie and Kiwi trades, I'll be looking to potentially align myself to a long position on that. The 60-minute chart on Kiwi still bullish ever since obviously we've had the RBNZ statement, etc. We certainly are pushing higher here, okay, and certainly looking bullish from my perspective. So again, the Kiwi, I'll be looking to target 200 MA next week, and this will be a zone. The 200 MA will be 0.69, and that certainly will be a target for me on the Aussie on the upside, given a weaker dollar. Okay. Now, in terms of the FTSE itself, now given the fact that you have commods, you have risk FX as well, certainly indicating a move higher. Okay, you have the dollar certainly moving lower. You have the Shanghai, the Nikkei, etc., etc. Now, bringing up a chart of Glencore, this is an interesting chart. Given the fact that we've closed this gap, we are looking to potentially move higher. We haven't tested this double bottom, so which is a bullish sign, and therefore I am looking for Glencore to certainly move higher, along with the miners in general. Now, the mining index, yes, I am aware, and I do understand the immense sell-off in the mining sector, which again is very, very impressive. I mean, going back to a monthly chart, again, it's unprecedented. I mean, we really are in unprecedented times. So going back to 2009, we've not seen these lows. So again, it's going to be very interesting. I mean, yes, we have broken and below the key level of support, but the 60-minute chart certainly is expecting a double bottom. Given the fact that you have stronger Chinese data, the miners should certainly catch a bid come into Monday's session. So you have a weaker dollar plus stronger Chinese data. It can only trigger a short squeeze at double bottom. So therefore, look for a move higher in the mining sector. Oil and gas is a different story. The daily chart, as we are aware here, you can see you are into double bottom support again, horizontal support, and therefore looking for a potential bounce. 10-minute chart, you can see you have a double bottom, and therefore looking for a move higher, and therefore FTSE 100 will certainly move higher too. Now, bringing up a chart of the volatility index on the FTSE itself, let's just bring that up and give you an insight. The daily chart, as you can see, the volatility is certainly into resistance. So the volatility index is into resistance. That generally means that the volatility index, if it is into resistance, it basically means that the fair gauge has reached a peak, and all the bearish news has certainly been factored into the actual FTSE 100 itself, and therefore we are now looking for a move lower. Now, you have horizontal resistance, you have multiple areas of resistance, which I'm showing you right here for the FTSE volatility index, and therefore you are looking for a move and a thrust higher on the FTSE 100 itself. Bringing up the weekly chart first of all on the FTSE itself, you can see that we are into this horizontal support zone. You have multiple levels at 5930. You have a support at 5877 as well. So you have these bottoming tails that will certainly kick in and certainly act as support for the FTSE itself. Daily chart, you can see here clearly you're into that zone there, 5930, 5900, 5878, and then obviously ultimately 5770. Given the fact that like I've explained, you have stronger Chinese data, stronger or bearish dollar, and the commodity currency is certainly indicating a move higher. Therefore, you are looking for a thrust higher on the FTSE. 60-minute chart on the FTSE, yes, we did test the 5950 level. So given the fact that we've actually broken below that pivot support, or pivot S3 support at 6020, so therefore very bearish, given the fact that we had weak news or bearish news on Lonmin, given the fact that we had concerns over South Africa and Iran, and obviously copper in general. So it looks like a culmination of all the bearish news certainly has basically reached a peak. Okay, bearish news upon bearish news, everything. Whenever the market starts to talk overtly and is inundated with bearish articles, then you generally know that the bottom is in. Okay, and vice versa for a bullish market. So it certainly is indications for me that we are looking to reverse on the FTSE 100 itself. Okay. So it's certainly interesting as to the move or the reversal. Now we do have two unfilled gaps in the FTSE 100. We have an unfilled gap at 6130 and we have an unfilled gap at 6095. 6095 will be the first area of a target zone for a potential long opportunity. Now we have this bearish channel. I am expecting this bearish channel to break higher and thrust certainly thrust higher. Now I must make you aware that I am long the Euro stocks and the Nasdaq going into the close. So yes, I do have an inherent bias in my analysis at this present juncture, but I am still expecting, I'm trying to be objective as I can here, and I am expecting a move higher on the FTSE itself. We should hold this into cash hours, given the fact that, yes, I'm aware in the aftermarket, we certainly did push to new lows in the FTSE, I think as low as 5920, but I am expecting the cash market to gap higher, given the fact that we've had stronger Chinese data, and obviously the dollar is weak and oil prices are into support. Commodities are certainly into support. Risk FX currencies are into support, and therefore you are looking for a thrust higher. Now, the initial thrust itself we shall observe in terms of the FTSE. Now, the 60-minute chart should be able to give us a better indication, given the fact that we have this pivot high here at 6170. Just using your Fibonacci retracement, you can take the pivot high. I presume this will be the pivot low at 5950, and you are looking to test the 6080 region, from my understanding. Okay. That's my understanding in terms of the FTSE. If I were to trade, that's a zone that I'll be looking at a potential, obviously long, looking to either to short at 6080 or to obviously take profit at 6080. Okay, and that obviously coincides with this diagonal trend line. So 6080, watch out. 6050, 6020, certainly that 6000 level will certainly trigger a lot of short, a lot of the shorts to certainly throw in the towel and. Again, it will be a psychological level to recapture. Okay. Now let's cross-reference the actual strength on the FTSE itself, and let's see if we can see any other alternative areas of support for the FTSE. Now, you do have horizontal support down here for the FTSE itself on the FTSE All Share. Okay, so again, the FTSE All Share certainly is into no man's land as well. We had this horizontal support zone here, which obviously has been negated, and you do have horizontal support just slightly down below. Now, the FTSE All Share we've touched upon. Let's look at the FTSE Euro Top 100. Again, into no man's land, into a zone where you very hard to find support. Certainly, one would indicate that you are looking for a further free fall. But given the fact that fundamentals always trump technicals to a large degree, you are looking at a short squeeze here once you're into the no man's land. Now, again, bear in mind, a lot of individuals will be caught short here, expecting a move or a thrust lower. Given the fact that you have stronger Chinese data, that will be the perfect catalyst for a short squeeze. Okay, so whenever the market is in no man's land and individuals are expecting lower prices, and then we have a fundamental catalyst that triggers a powerful short squeeze, it's usually in an area where there is a lack of support. That's probably the best way of describing it. Okay, now you do have horizontal support just slightly below at 750 on the FTSE Euro Top 100, so that certainly needs to be taken into consideration. Now, the actual alternative indices, let's just bring up the FTSE 250 now. The FTSE 250 on the daily chart certainly is coming into potential support as well. You have this pivot low here, again, so that's a double bottom support on the FTSE 250, and obviously if you go below, you have support at the 16,800 region. So therefore, you are looking for a potential rally here now on the FTSE, and obviously you have this diagonal trendline support as well. So the FTSE 250 certainly is coming into support, and that will help the FTSE 100 move higher. That's my interpretation thus far. Looking at the mining and gas, we've already covered. Now let's look at the retail sector. Retail sector, obviously you can see here, very, very weak. Certainly has pushed lower, given the fact that we had weaker US retail sales, and that obviously doesn't bode well for the UK consumer. Now you do have support down below at 310, so that should be very interesting on the daily chart. So certainly weak in terms of the retail sales side of the equation. Now, given the fact that we had stronger retail sales in America, that will obviously help the retail sector in the UK, so therefore expect a short squeeze. Okay, the banking sector certainly is the one that's leading this market lower, given the fact that even though we have this rate rise that should technically be helping the banks in the US, from the US perspective, but we certainly are weak at present. I think there was a news with regards to capital controls or a certain amount of capital that they have to have in order to show up the balance sheets, and that's obviously having a negative impact on the banking sector, and you can see that we are still weak. So any type of bounce on the banking sector has to be comprehensive with a good catalyst. Otherwise, the banking sector, once it reaches that previous support equals resistance, you are looking at further weakness. Okay. Telecoms, or should we say, sorry, pharmaceuticals are back into support. So again, that's bullish for the FTSE 100. As you can see, the diagonal trend line there. The daily chart of telecoms certainly weak, very weak here, very weak. Okay, so again, you are coming into support now. Previous resistance equals support, and therefore you are looking for a bounce on the actual telecom sector, which obviously is good for the FTSE itself. The beverages, again, 60-minute chart looks very bearish here, very weak here. We have made a new high, but we have failed to hold that previous resistance equals support. You are coming into support for the beverages sector, so again, you are looking for a potential pop on the FTSE itself. The insurance sector on a daily chart, very weak, okay, especially given the fact that we've had these floods, and that certainly is hurting the insurance sector, okay. Now, again, that's certainly very bearish and certainly doesn't bode well for the banking sector either. Hence the reason why you're seeing this weakness in the FTSE 100. Okay, so again, you are into support. Whether how long this support lasts, whether it can be sustained, is a different question altogether. Even the auto sector, you can see here, we're certainly seeing weakness as well. Certainly experiencing weakness. So again, although you are into diagonal trend line support, so bear that in mind. You have horizontal support down here as well. And given the fact that we've had positive news out of Volkswagen and BMW, it certainly does bode well, and we are looking for a potential new high. Okay, so overall, observing all the sectors, you are looking for a bounce. Well, how strong and how sustained that bounce will be, that's a different question altogether. Okay, now even the emerging markets, you can see here, I mean, we have a gap level that we've closed on the emerging markets, so you are looking for a potential move higher, especially given the fact that you've got stronger Chinese data, and you are looking for a potential thrust higher emerging markets as well, and that should obviously take the FTSE 100 with it. Now, in terms of the commodity sector, let's just bring up the CRBQ, which is a popular index to observe commodity strength, and you are now coming into double bottom support. So again, another argument for a potential bounce in commodities. I've already explained that stronger Chinese data, weaker dollar, and given the fact that Miss Yellen may well, given the fact that the markets have obviously been punished as of late, Miss Yellen may well sound dovish going forward. Yes, she does. She certainly goes ahead and certainly one and done in terms of the rate hike, and therefore after that she is very dovish. Okay, and she remains on pause for a substantial amount of time, and that will obviously weaken the dollar. Okay, once that weakens the dollar, that will help commodities, and the FTSE 100 should certainly regain its poise. Okay, so again, commodities, interesting how the dollar itself is weak and commodity sector, or the commodity index, is now into double bottom. We have stronger Chinese data. Everything is going for the FTSE 100 here to move higher. Okay, so these are my arguments from a trading perspective, folks. Obviously, always do your own analysis, but this is basically what I'm expecting. Okay, now the 10-year yield as well. This is another argument for the dollar to certainly move lower. The 10-year yield, you can also, should we say, a 10-year T-note is certainly looking to move higher. The bond market is certainly looking to move higher. That will obviously push the yields lower, and therefore you're looking for a weaker dollar. So I am expecting a thrust higher on the 10-year. As you can see here, you're looking at the 10-year bond certainly to move higher, and the 129 level, 129.5 level certainly will be tested, especially given the weak data that we had on Friday, and you are looking for a weaker dollar. Okay, and therefore a weaker dollar means higher commodity prices, and I think we all know what happens next. So certainly a thrust higher here. Okay, certainly looking for a move higher on the FTSE 100 for Monday's trading session. I wish everybody a good weekend. Be sure to visit cfds.com for your trading needs. Goodbye now.